to Mr. Adonri. Okay, we'll try to connect to Mr. Adonri, but my colleague is already standby and he's already in the studio standing by to talk markets. Effiong, 1.84%. Of course, this is significant. This is significant. Take it away.
Extremely, very deep, trading in the lower territories today, almost getting to 2%. That's a very huge price cut, each day. And look at the long lines of big companies that are on the red side. Guinness, Dangote Cement, GT Holdings, MCN, Nigerian Breweries. Just let me drop there. And the mention of all of these companies, they carry weight on their own. And as it happens, as they do the line, so they drag the market down, especially when you have MCN, Dangote, and Cement. Look at, the depths of loss and then relating to losses. So in many of the market sectors, investors are taking huge losses and companies too. And that is also saying that investors will be losing.
Let's get Mr. David Adonri's view with regards to these figures we are seeing. He's the Vice Chairman, Highcap Securities. It's good to have you as usual, Mr. Adonri. React to trading for today.
Thank you very much. Good afternoon, listeners, and especially to all of you at the studio. It's a pleasure being with you today. Well, the table is been reacting to downside forces in the recent past. But with the way things are now, with the stability we are seeing, it's like the equities market is hitting a resistance level from where it is likely to bottom out. But that notwithstanding, if you examine the market very, very well, you see that the prime movers of the transactions in the market are perhaps best described as the penny stocks. They are not the iconic stocks in the market, indicating therefore that investors' confidence still remains very low. And market has already reacted to the third quarter earnings while we await the end of year results. So we are essentially at a period in the equities market where the trend is subdued until at the end of the year, after the festivities, that we know where the direction will head to. But with the way things have gone so far in the market, I think activities have shifted to the debt market. If you look at the yields on bonds, the yields have been increasing. In fact, I checked recently and I saw that the yield on 10-year bond has increased to more than 14.5%. This therefore means that financial assets continue to shift from equities to debt. So that is the way I view the market so far.
I must thank you so much, Mr. Adonri, for your insight, as usual, on the program. Thank you for your contribution.
Always a great pleasure. Bye.
All right, then, Effiong Ekop, let's wrap up.
Investors do not buy or sell stocks just for the reason anything. They measure what is the fundamental issue.
Yeah.
And again, the basic elements coming from the economy. And what are they? You have inflation, you have the exchange rate, then you talk about state of infrastructure, which all of these are not really favoring investment. Yeah. And so they create a kind of fear somehow. And when you combine all of them in a basket, you see them, coming back and then loathing, to move forward. Right. And so we are going to just be looking at it and having this for some weeks, at least as we approach the end of the year.
Thank you so much, Effiong Ekop. We need to move.